Hey everybody, this is Jim at SP500chart.com. It's about 10 minutes after 4 on March 6th, 2014, and we're going to look at the S&P 500 chart as we do after every day's close. Before we look at it, I need to remind you that the website and this video are for educational purposes only, and nothing stated at the site or in this video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Oh, by the way, when I say that you need to make investment decisions that are suitable for your personal financial situation, what I mean by that is there are people in the world for whom a bad week can cost them $1 billion and they'll be fine. And there are people in the world for whom a bad week where they are down $500 causes serious pain. So you have to know what your risk tolerance is. Okay, that said, we're up again today, a small amount. And it looks like the S&P sort of doesn't want to give up the ghost here. I keep thinking we might come down, check one of these lines of support, because we had that gap up, and really, since then, it's just been this slightly sideways to up motion, which I keep getting the feeling that we should come down and let off a little bit of selling pressure before then turning back up. But the S&P makes another high today. We're 1877. We're obviously, and have been now for 3 days, over the 1860 level that I felt, if we ever closed over that, should signify a legitimate breakout over the neckline in our truncated inverted head and shoulders pattern. We don't quite see all of the left shoulder over here, but here's our neckline. There's the left shoulder, there's the head, there's the little truncated right shoulder. We kind of noodled around a bit around that neckline, broke out, not quite, came back under. Now we are technically significantly above this line. This line was at about 1848, and where we are at 1877 is almost 30 points above it, and just eyeballing the math in my head, about 1% and 2/3 above that level. I'm guessing at that, okay? So, what are we looking for? Well, you know, it's kind of the same story as yesterday, and that is we're just sort of noodling around this resistance line here. I think there's a chance we could break out over this. But we did to start with today. Then we came back and we closed underneath it. You could see, you know, if I want to adjust that line just a little bit to make it look more impressive, you could see how we had a touch on that line midday yesterday, broke through it today, back tested it, went sideways a bit, broke through it, then tested it again. So it looks like this line is important to the S&P. It's got something going on with it. But if we're going to get up to that target from our inverted pattern right here, that's up around 1958. Here's that target right there. That's the depth of our pattern from our neckline, and the point of breakout really doesn't matter because it's about a horizontal line, but that takes us right up to about 1958, which is going to be real interesting, because look at all of these trend lines that are congregated sort of close to that area. And it seems as if these might be saying we might get there, but it might take a while. Interesting to note, there have been a number of years where we have had a high set in April or May. And if that is the case again, In other words, if we're looking for a spot where we can get up to 1958 without messing up any trend lines. Oh, that's funny. I didn't even know. I guess that's why I put that there. That would be in the middle, right in the middle of May. So maybe we're just going to kind of reach that point, but in a manner that is not particularly as exciting as coming off this bottom down here in early February. So guys, let's do this now. I just want to move this chart back. That's kind of the big picture. Let's now take a look at the small picture. I'm going to change these lines now because we got more info on the chart. And what I'm going to do, I could have just moved them, but I'm going to put one here, about right there. Tell you what, let's do it like that. And we'll make that blue. And then I'm going to create a parallel to that. Kind of throw it up there. For what it's worth. You know, that I think comes pretty close. We're going to make this follow those tops a little better. If this is what we got going on here, this you know, I just look at this line right here. I would say if that breaks, we got to come down. We got to come down to maybe even test 1860, which is an ascending support line. I wish I had something more definite to tell you on that, but the fact of the matter is this just sort of looks ripe for this bottom line to break and for us to come down. I don't believe in gap closing. I don't think they have to be closed. Matter of fact, I think there's a gap down around 56 or 57 in the NASDAQ composite, you know, from a long time ago. But just keep an eye on this. If you're really anxious, I would say if this breaks, you know, do what you want to do. But I would definitely be looking for support not that far from where we are right now. I think we would get a good solid bounce, maybe on this little pink line right here, maybe a little bit lower, coming a little bit closer to finding gap support from that nice gap up on the 4th. So guys, I think that's about it. I'm keeping the target on the chart of 1958-ish. 1957, 1960, something up there in the mid to high 1950s, because that's what the chart says. And as I showed you, there's room to get there without having to mess with any of these lines, if the markets are willing to just do kind of a slow melt up from this point on for about the next 2 months. So guys, there's your video for March 6th, 2014. Thanks for taking time out of your day to watch this. Thank you so much for your kind support. And if you're not a member of SP500chart.com, swing over to the website, see what it is, see what it's all about. It's very affordable, and you get a daily technical analysis video of the S&P 500 after every day's close. So, hey, thanks for watching. Take care.